All right, welcome everyone. So me again, founding partner of Comma3 Ventures. So we do have a lot of, seasoned investors here. Each of them, just too many ideas and then two experiences, right? So why don't we just do a short round of introduction by yourselves and start on Clara.
Ivan for having us. Hi everyone, I'm Clara. I'm from Lightspeed Faction. So we are a sister fund of Lightspeed Ventures, focusing 100% on crypto and blockchain. And we look primarily at the early stage, so seed to Series A is our sweet spot. We are vertical agnostic, and our North Star is really backing great founders who focus on creating real utility along with pushing real frontiers. So yeah, that's all from us.
Thanks for having me. So UOB stands for United Overseas Bank. We are one of 3 local Singaporean banks listed on the Singapore Stock Exchange. You should see us around here. If not, you might be in the wrong country. So for myself, I sit more on the investment side. Here we have a lot of different funds with different mandates, but for myself, I focus more towards blockchain investments into Web3. So we typically come in early from pre-seed all the way to Series A. And so that's just some context to ourselves.
Okay. Hey guys, I'm Benson, and thanks Comma3 for hosting this wonderful event. And OKX Venture actually set up around end of 2020, and before that I spent around 3 years responsible for token listing of OKX. The purpose or the vision of OKX Venture is pretty simple. As a CX venture arm, we are not so much financial driven. And we, as a CEX, we spent around a decade to build a secure and a regulated CEX trading platform. But since years ago, we want to exploring other vertical ways to make more contributions to the industry. That's when we started building our Web3 ecosystem. I would say now it's a very prosperous ecosystem with our wallet. It's the best wallet I would say in the field right now, and also our layer 2. We got our on-chain data explorer as well, and recently we also announced our on-chain OS. You can also see it as XOS. It is a one-stop developer solution. We provide it as a SaaS to all the developers who want to join the Web3 ecosystem. So our purpose is to find the founders that can work together with us and let them be able to leverage with all the resources or the experience we have accumulated during the past several years, and then make blockchain scalability together.
Yeah, there's one thing I think we all agree, and all of us in common, is we love our portfolio founders, right? So we try to help. So yeah, that's, I would say, first question we can maybe think about. Macro environment always impacts all the money market. And thankfully, good news, last night, I think Federal just cut the interest rate by 50 basis point, right, if I'm correct. So yeah, it's a little bit beyond the imagination, I guess, expectation, right? So 25 or 50, but yeah, it is good. And then market is sort of going up today. So I want to ask all of you guys how the macro environment impacts your investment strategy, or any challenges out of it. Can we start with Clara as well?
Can you hear me? Yeah, so I think generally the macro environment doesn't really impact our investment strategy. We are a venture fund, so we have the luxury of not being impacted by the volatility of the market. So for us, it's really keep investing, keep finding the best projects, keep finding the best founders. I think in many other aspects, it also doesn't really impact our portfolio companies, because for them it's really just about building towards the problem that they are facing. If the problem statement that they were facing gets impacted by the market conditions, then they pivot. So I think the good thing about betting on teams is that swapping of there will always be swapping of ideas, but there won't be swapping of teams. So finding the best teams that could pivot well when necessary, that's important. And I think in that sense, if you can find it, the best team to work with, the best team to back, then that wouldn't be that much of a worry. However, I'll caveat that one major thing that gets impacted by macro conditions is definitely funding. So I think that is something that with time is going to wane off if market conditions are bad. So making sure that our portfolio companies remain well capitalized, whether or not it's by seeking grants, whether or not it's like by engaging in like investor conversations, the whole bridge rounds, or like full financing rounds. I think that is super important because making sure that you have runway is definitely key to make in order to ensure that you can see your idea out.
Justin?
Yeah, I think for myself, maybe I come from more of a traditional background, right? So here at UOB, we naturally also have an in-house economist, and that's something that we pay attention to quite focused to some sense. I think if you take a look at the whole global market, right, liquidity at the end of the day is cyclical. And if today, for example, interest rate before the rate cut was so high for the past 1-2 years, naturally everybody is going to move into more conservative assets. And that means less liquidity for speculative assets such as your digital assets, even into private assets and things like that. And that actually creates a problem, right? At the end of the day, the Web3 or the crypto market is already cyclical in nature. If you take a look historically, we have had a couple of past cycles, from DeFi summer and all the way moving forward till hopefully one more to come. The whole macroeconomic condition actually sort of makes it even worse for the crypto market. It makes things swing even more. So I think like what Ivan was mentioning, right? Today's morning rate cuts is actually, I think it can be viewed positively, and all these macroeconomic events can help actually pick up the market, especially the digital assets market much better. I think for us here, we are looking forward to the end of this year, especially post-election wise. There are greater clarity. Hopefully the right president wins, and then the market picks up. I think that's something that we are all looking forward to, and then we are actually helping our portfolio companies work around this so that they can capture the bulk of this liquidity. I think that's something that's important to us.
Yeah, a little bit echo to maybe Justin. So a little bit echo to Justin, and I think, in my humble opinion, I think the correlation between crypto assets and macro variables may currently is still very low, except the period, just like recently the seismic shift of the market policies of Fed. But this kind of the changes, they reverberate throughout the whole liquidity markets and including crypto assets. But if we look back to, so in this situation, the correlation spikes. But apart from that, if history really repeats and we compare the current cycle with the last interest rate cut cycle in 2019, we actually already see a lot of similarities on the price trajectory of Bitcoin at that time. The only difference are two things. The first is that last cycle, the high interest period lasts only for like 25 weeks, but this time it's lasted 2 times longer. It's like, till yesterday is 54 weeks, I remember, yeah. So this kind of the long high interest rate period can cause some problems, and with the ETF launch, the pricing here can also be more rigorous and efficient. So we think that the price transmission period can be prolonged. So with that being said, recently we have slowed down our investment frequency to a little bit. We deployed around $50 million to the market last year, and even in Q1 this year, we closed more than 10 deals. But in the past 3 months, we barely made any investment, to be honest, because, like Justin said, we are in a very cyclical industry. The segment rotation happens so dynamically. For example, if you want to invest in risk-taking, on the private market, if you want to invest in risk-taking, the best timing is Q3 last year. Maybe not Q3, just September or October. Renzo, Ether5, Puffer, all the lead players, they completed the funding in that 2 months. And in Q4, we have some good narratives from the Bitcoin ecosystem, like the staking BTC from Babylon and Bitcoin scaling solutions with UTXO-based models or EVM models. But entering into 2024, the market is all about, the attention is all about, Telegram ecosystem or meme coins, and as well as the, CEX listing strategies. But the reality is that for most of the crypto startups, the average runways for them is just like 3 quarters or 1 year at most. So missing a time period in crypto can be much painful. So that's the reason why we also are trying to persuade our portfolio companies, not only how to build on-chain metrics. Instead, focus more, on explore the revenue generation activities to have a healthy runway and survive or thrive till the good timing. Thank you.
Yeah, it's very good. I mean, I've seen Benson, making a lot of very good investment decisions. And it's good to have we count investors across the spectrum, right? The pure Web3 native fund, like a little bit Web 2.5, different angles. So next question, I want to discuss about something about in the market. A lot of people say, hey, wow, those VC coins, high valuations, high FDVs. So essentially a lot of, say, layer ones, right? So a lot of layer ones, what about applications? So how do you look at the current layer one investment or ecosystem? Or there's certain verticals or sectors you're looking at, for example, applications, or you bullish on games, something like that. So I think this one we can start from Benson.
You mentioned several ones, and also we actually have some portfolio companies in Solana ecosystem, but not so deeply involved. But I'm actually jealous of the good vibe here. Maybe the best vibe in crypto is on Solana. But I see the difference is that the Solana token holding distribution is not so decentralized as Bitcoin or Ethereum, which both basically complete their distribution through periodic mining. Solana do have several giant shareholders in the ecosystem, and I feel like that we are not, sitting near the intersection right now. But we are trying to back them all. I would say our biggest preference is still for Ethereum. More than 70% of our capital are deployed into the Ethereum ecosystem, and I know they're doing a lot of criticism about Ethereum, especially the price performance, the exchange rate between ETH and BTC is getting lower and lower. But still, and also Ethereum Foundation, a lot of you guys left recently. But it is a non-profit, entity. As it grows bigger and bigger, it inevitably will have some, misalignments or, some other, big company problems maybe. But no matter you like it or not, is holding AMA very regularly, and they are giving out very clear and committed, technical upgrade roadmap. It's kind of easy for investors like us, or retailers, or even builders to navigate in the space and maybe work together to solve some quantifiable engineering problems. And also speaking of the value capture problem, I saw Justin Drake and Natalia talking a lot about the pre-compiler, the base rollout stuff to solve the value capture problems of layer one, which is I think it's quite common problem. So our biggest focus will still be in Ethereum, but in sector agnostic, we will be willing to invest into every sector, every segmentation. And speaking of Sway, because we have some Sway founders here, I really like the way that Mr. Labs and Sway Foundation that interact with the investors like us or with the builders. They also got a very clear vision and very clear value proposition, which is to lower down the entry threshold for the new users, especially Web2 users. Meanwhile, keen to build a DeFi and gaming ecosystem. We have access to good founders, and they are all very sharp and good at learning and iterations. We'd love to get more deeply involved. That's it. Thank you.
Yeah, I think for us here, we do take a slightly different approach. We tend to be quite chain agnostic in terms of what we invest. So for example, like Benson was mentioning, we invested in Clara. On Apples, we invested in Clara. On base chain, we do have Moonwell as well. So lending protocols across the different chains, and it's not because we diversify our bets and things like that, right? But I think at the end of the day, the way we look at things is that each layer 1 or layer 2 out there is a different ecosystem altogether, and that actually segregates the community as well as segregates the crowd that they appeal today I think the main issue why so many people are upset with this VC coins, right, as well as this high FDV float meta that's going on. The main reason is because after so many cycles in the digital assets market, people are, the retail is no longer dumb. They know, and they are not reluctant, and they are no longer willing to be dumped on by the VCs who are going to just dump the coin on day one, or when their investing is over, they're just going to dump the coin. And I think that's where most of the upset actually comes from. Like what Benson was mentioning, if you look today, Solana is still pretty much centralized. But if you bought it last year at $20, today you'll be up like maybe 7x. And why are people still believing into Solana as well as participating in the community? I think the main reason is because of what they can do, how they can actually bring it. I mean, you just take a look into like Monet. Monet is, and their balance sheet is so big, but and then their community is trying so much, but yet Monet's testnet is not out yet, right? So I think that's something that is important to focus upon. I think it's actually what the community is going to, as well as what the community is focusing upon. It has less to do with oh, this is just an L1. It's a high float type of thing. I think that's not what people are really upset about. They just don't want to be dumped, and they want to feel like they're part of something. I think that's an important differentiator to remember when looking across the different chains.
Hello. Yeah. I think for us, we are actually pretty similar to UOB, whereby we are pretty much ecosystem chain agnostic, and a lot of our focus when it comes to chain is actually on the infrastructure level, it's actually on the tech aspect. So like definitely way less interested in L1s and L2s with like which are just multi-sig or just another like fork of Ethereum, etc. Like we are more interested in infrastructure that truly unlocks new use cases. So I think there are quite a number that are in production or have been launched recently. So I think base rollups, like Benson mentioned, is one interesting one that we have invested in. So like we invested in Tyco, we invested in Papa as well. Very excited about what they are doing in terms of decentralizing sequencing. I think like no other rollups have decentralized their sequencing today other than base rollups. And the best thing about it is that they do still accrue value to ETH itself. And that essentially is just beautiful. Like it's just super organic. It makes a lot of sense in terms of presenting itself as a scaling solution to Ethereum. So I think that is one. And then the other kind of like tech innovation we're excited about is parallel EVMs, and for that it's really all about performance on a single state machine. So I think like it's really these aspects, like and thinking about what can these like new L1s and L2s can unlock in terms of use cases that makes it exciting, as opposed to just going about with like okay, this new L1 or new L2 with this fancy new name, with this like nice looking mascot that could potentially draw hype. Because I think that is it's essentially the tech that builds narrative, that draws in the community, that then creates a more sustainable flywheel. And I guess to Ivan's question on kind of like sectors, I would say generally also sector agnostic, as long as like the applications are interesting, they are built with the right tech, they have the right stack, that is always interesting for us. But I think one key sector that we have been increasingly paying attention to is on payments, just because it's a low-hanging fruit of blockchain and yet still relatively untapped on. So I think when we look back in the past, where we see folks switching from like let's say sending like letters to each other, to emails, to text messaging, like and various other forms whereby you see people transiting to different modes of technology. It's always about getting to faster and cheaper modes. So I think it's a no-brainer that blockchain crypto can enable payments to achieve way faster scale, way cheaper, at way cheaper cost. So I think payments is something that we have been paying more attention to as well.
Yeah, that's a lot of very good sharings. And last one, I actually care about this because all the crypto communities, they care about this. So the question would be, where's the altcoin season? I mean, it's hard to find altcoin. Is Ethereum altcoin? No, this is not right. But Ethereum is my first cryptocurrency, but yeah, but I want to make it very short. So can you maybe one sentence or something to give us more color about, hey, where is the organization? Is it coming, or what is your point of view on that? Clara, you want to go first?
Honestly, I wish I could tell you. If I could tell you, I wouldn't be sitting here. I would be retired. So, I'm sorry, Ivan.
I'm just one of the answers, right? Justin?
I think today, also if you take a look at the market, right, like what Ivan was mentioning, you see the major market caps when they fall. I mean, at the end of the day, digital assets are very, very correlated. I think there's a very high degree of correlation. If you go and use DeFi Llama, you can just go and see what's the correlation index between two tokens. And today, when the major market caps actually plunge, the altcoins plunge as well. If not, and a lot of them actually plunge even more. And that's because people are taking profit, right? But when they recover, right, altcoins don't recover as much as the major market caps. And that's the issue there why you're not getting your altcoin season. The main reason why I personally feel this way, not representative of my firm, but why I feel this is actually happening is because there are too many projects building in the same category, doing the same stuff. And then that becomes a PvP competitive season there, right? When things go down, you start to take profit because you're scared that this project cannot recover, you're scared that this project is no longer going to be profitable. And so, I think when altcoin season will actually come back is when consolidation happens. Like today, I can't remember exactly what it was, but in AI there was really a consolidation there, right? With the top AI, crypto AI project, right? There was a consolidation there. And I think more consolidations will come as the market picks up a bit, because that's when your war chest becomes bigger and you go out and buy competitors. And when that actually happens, that's when altcoin season will actually pick back up.
Yeah, I actually don't trade as well. I only hold, so just some small add on to Justin's. And actually, there are two risk factors we need to pay attention to see the. But I'm really about is the potential altcoin seasons in this cycle. The first risk factor I think is there are so many overpriced, low qualified projects raised tons of money last year, and because the CEX only listed meme coins and Telegram coins this year, they are waiting in the listing pipeline of all the CEX to extract the liquidity from the secondary markets. Just a great example, Alio is listed on MXC, and Coinbase is just unbelievable right today. And the second reason is that I think I went to the conference yesterday, and Arthur mentioned several times we should pay attention to the exchange rate between JPY, Japanese yen, and USD or US dollars, because I saw the metrics at the beginning of this year. The speculative average trade of yen, the position as big as around maybe $400 billion. And this speculative position need to be unwound during this kind of the interest rate cut situation to avoid the potential losses, and which is a much bigger liquidity extraction for our industry. If we can see some signals that shows this situation has seen some mitigations, will be possible to see some more conceals.
Nice. Very short conversation. So thank you again, Clara, Justin, and Benson, and a lot of us here. You want to reach out, please do it in a very, very good manner. Thank you.